Once again, I want to welcome all of you who are here. It's great to have you with us. My name is Stephen Fetter, and I manage the United Learning Program for the General Counsel Office, and it's my privilege to be hosting this program tonight. We're delighted to have you with us, and I hope that as we provide these weekly updates for you, that we're not only making your life easier as church treasurers, but reminding you how important a job you have and what an important part of the ministry in your congregation you play. So thank you. Thank you for the work and the time and the sweat that you're putting into this. It matters, and we're grateful. I'm going to turn things over to my colleagues Eric and Clyde, who will deliver our content tonight. As we've done before, I'll be watching the comments that come up in the chat, and I'll pose the questions to folks as they come along. If you're in Zoom, we'll ask you to keep your cameras off, just because it's distracting to have a whole bunch of cameras on when we're trying to pay attention to the speaker. And if you're in Zoom, you might want to be on speaker view so that the person who is speaking comes up larger. I just changed mine too, so that it'll look that way on YouTube as well. I have a colleague, Aaron, who will be watching the chat in YouTube, and he will collect the questions that emerge there and bring them up for us so that we can address them here too. I'll collect those questions under the different topic headings, and when each of the speakers comes to a stopping point, then I'll try to pose questions that are grouped together according to topic. So without further ado, then let me turn things over to Eric.
Okay, and Clyde, if you can share the presentation screen, I can certainly start without it as it's coming up. As usual, we'd like to just take a moment to just for a land acknowledgement where you are. It isn't our, some church meetings we have a custom of typing in your local land acknowledgement, but we're also trying to track everything that's in the chat box for questions. So just if you could just make a note to yourself where you are in the country. I'm in downtown Toronto, and that means that we're on the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples. It is now home to many diverse First Nations, Inuit, and Métis people. Toronto is also covered by Treaty 13, signed with the Mississaugas of the Credit. So just important to remember that through all of this challenge too. I have one more acknowledgement too. There's been a few comments about muting this shirt. I want to thank the people from the prairies. This shirt is a gesture of prairie pastoral care in response to Eric having to wear a Vancouver Canucks shirt. The flamingo, that beloved bird of the prairies, symbolizes resilience, hope, trust in God, and winning the Stanley Cup eventually. So that's from Julie Graham and the folks out in what we also call Shannon Land in honor of Shannon McCarthy, who's the executive minister there. So let's get started. We have a fair bit of ground to cover, and Clyde is going to do the heavy lifting. Clyde has been working away at filing some of these 75% wage subsidies and testing the best practice for getting ourselves these electronic access codes that we're going to need. And that's one of the big learnings for the whole thing. Everything right now is electronic. There's no such thing as a snail mail to the government to get the assistance that we're looking for right now. Next slide. And Clyde, you can hit it a couple of times because it'll be the new creed, and I have it phased in there.
Is that showing for you now?
It isn't yet.
It's not moving, Clyde.
Yeah, sometimes it takes a second, but again, I include
those down the bottom right corner. The arrow pointing right is what you want to click, Clyde.
Yep, that's what it's actually showing on my screen.
Oh, okay. It's just late on ours then.
Okay, well, in any case, I always include the creed to just remind us that we're called to be the church, and we aren't alone. And boy, is that ever true right now with the problem solving that treasurers and financial people are trying to do across the country, and trying to do that with varying degrees of baseline in terms of the existing systems and so on. So Steve is jumping in. Okay, there.
Yeah,
Yeah,
I'm going to share it instead because Clyde just wasn't coming up. And
okay.
Okay.
So in any case, I've said what I need to say there. This is a remarkably challenging time, and the treasurers are literally doing everything possible to keep their church solvent right now, with our doors closed and so on. Next slide.
I'm showing what we'll cover tonight. Is that what you're seeing?
Well, I'm not seeing it, but it might just be a little slow coming across.
Oh, hang on. Resume share. Try that.
Okay, so we've been starting with Mea Culpas, and I have a few more of those. But the latest news, there have been a number of announcements, most of them not related to church business, I would say, but want to confirm that the $40,000 loan that we had strong assurances about a week ago from the political side, the very next morning, the Department of Finance clarified that congregations in particular are not eligible. Secondly, and I'll speak to that just a little bit more, certain outreach ministries might be, and we'll talk about that. We haven't seen a lot of details yet about the rental program, but what we're hearing is that it won't have any impact on churches at all, that if you own your property, right away, the program, you're excluded from the program. So, those are two bits of bad news. We are, of course, actively involved in seeking those wage subsidies. And there is still lobbying and some analysis going on around further support for the charity sector. So there could well be news next week, as there has been every other week. So the major focus tonight is that the 75% wage subsidy program is live. The government is expecting to receive thousands of applications in the next couple of days, and is expecting to issue billions of dollars next week. Also live is the United Church program. There's an application form on the national website, and I believe most region websites. So also the information that the CRA has put out is much improved. They've got frequently asked questions. Their material now is about as comprehensible as I've ever seen it. And they really tried to simplify it. They're constantly updating it for feedback. The calculator spreadsheet that they have, that all of you should have seen or looked at or will tonight, is on version 4 the last time I looked. And they're just updating it as they receive feedback, trying to make it simpler and so on. Next slide, please. So the Mea Culpas, final answer. This program, the CEBA program, congregations will not be eligible. Camps may be. If you have an incorporated thrift store or something else that generates sales revenue, and specifically line 4640 on a T3010, then you might then you are potentially eligible. I've sat in on 2 Department of Finance briefings on how to measure revenue, and nothing too much has changed. The main message is be very consistent. If you're going to choose a cash method or accrual method, or including something, excluding something, be consistent throughout. And of course, we are challenged with the number of people trying to get their CRA access codes all lined up. So we'll talk a little bit more about that tonight too. And Clyde has recorded a separate webinar on United in Learning about how to do that with Service Canada. Next slide, please. So just on the CEBA, I saw a number of comments there. Church is not eligible. Camps typically are. You must be incorporated, which our congregations are not. I think there's one in Whitehorse or maybe Yellowknife where we might have one church that is incorporated that I know of, but churches are not. And generally, we don't have sales revenue in the sense of selling stuff that isn't for a fundraising event. So line 4640 of a T3010. And the language that some people caught is exactly what you show here. Religious organizations are excluded unless they meet these very narrow specific conditions. So I certainly apologize for the back and forth on this, but there was a lot of confusion in the system, and I've been fielding calls from other denominations saying, you know, what's going on. But the program was always marketed as for not-for-profits, and you know, I think from a charitable sector point of view, we're trying very vigorously to make the case that there needs to be something more for our sector. And by our sector, I mean the charitable sector. Okay, next slide, please.
Before you go on, a couple of people are asking, what do we do with the money? We got it. Do they take it to the bank and give it back?
What I'm going to say, the folks who objected originally or were concerned, you are part of the contract is you attesting, you know, whoever applied for it, certifying that the language here on the slide. So yes, you should, yes, you know, I think the technically correct answer is you should give it back. But I also want to flag for you that there isn't even a way to do that yet. Things are moving so quickly that they could send you, I could put $40,000 in your bank accounts without a person touching it or without eyeballs ever seeing your application. There's $40,000 in your account and there isn't yet a way to give it back. But the right thing to do is to do that. Next slide, please. So you've seen the life preserver thing. We think the rate of change may be slowing down a little bit. Certainly the biggest life preservers are these wage subsidies. You know, on the church side, you know, we have the church loan program. There may yet be more for charities, but we're at the stage of really fine tuning and trying to, the government is trying to pump the money into the system so that people can, you know, stay on the payroll or pay rent and all those kinds of things. So we think things are slowing down. Next slide, please. So here are the two, I really like these. The government stuff, as I said, is the most comprehensible I've ever seen. The overall web link for wage subsidies is the big print. And then they have a frequently asked questions that is really written. It isn't just written for accountants and payroll professionals. It's about as accessible as I've seen. It's still complicated though, because you've got these overlapping dates and you've got to factor in weekly versus monthly, and we'll be talking about that. Next slide. So the 10% subsidy, one thing that we got very right, and I'll just say that that's more good luck than good management, is that the 10% subsidy does need to get taken, processed. We control that ourselves, whether if we signed up to have ADP do that for you. Well over 1,000 congregations have done that. We're looking to see from a confidentiality point of view if we can put a list up on our website so you can check for yourself. But basically, the monies should start showing up in your bank account in the next few days. It is, remember, they process your payroll. So if it was starting April 27th, they process your payroll. They remit to do all the accounting for the remittances as usual. Then they take some money out of the income tax bucket and put it back in your bank account. So if your payroll was you know, today, then you should be looking at your bank account next week to see the first credit. And obviously it's pretty easy to just follow up on that and reconcile it later on. There's quite a number of folks who are already either doing it themselves or waiting to see if they had to do it. And again, you'll have to, at some point, account for this, because the government, if you're applying for the 75%, the government assumes you've gotten this. Okay, there's plenty of time to do it. All the whole balance of the year, you can chase after this money. But in terms of the wage subsidy, the 75%, the government is offsetting this 10% if you're eligible for it. And frankly, I think every single person on this call or on YouTube would be eligible, because of the basically all charities were going to be eligible. Next slide. So, we did ask, and we've gotten a number of notes from people who are processing it themselves, but have also registered to be on, to have Eileen and the national payroll team be able to help out in future. So there is a possibility that there might be some duplicate processing. Individuals who have people on ADP and off ADP, you'll have to basically figure that out. There's nothing we can do if we don't even know about the folks. So the main thing, though, is the calculator is online. The change form that you need to use if you aren't having it done for you is online for you. And the main point is, this is a few thousands of dollars for most of you. There's plenty of time to get this. You aren't missing a deadline or something. And we can probably even help with the national team once we get past this first hump with the 1,060 congregations that we're helping. We can probably do some more help in the next few weeks and get you caught up. Okay, next slide, I think, turns
Before
it
we
over.
go on to that, a couple of people are asking, Eric, when we see the money coming back next week, should we expect it for March and April, or just for March, or just for April? When does this 10% start?
Well,
The
first test is it will depend a little bit on it. We will be going back and getting the full subsidy from the start date of the program.
Mm-hmm.
But how much we can take at once depends on your local situation, because it will be limited by how much the income tax bucket is. True. So in some cases, you might be able to get all of it in one go. In other cases, it might take a couple of months of payroll to finish that off, because you're basically drawing from the income tax bucket. I saw a question here from James. So payroll April 26th. My understanding is that our start date would have been April 27th, which is one of the big payroll dates. So yes, you would be waiting till late May to see your number. Okay, let's move to the next slide, and I'm going to move over to watch the chat box. Basically, Clyde is going to take us through the what's called the CEWS, CEWS, and there's going to be we're going to walk through all aspects of it and hopefully equip you to apply for that. The key message being, as we suspected, you will have to do that yourself. You have to determine your eligibility by looking at your accounting, and then you're applying directly to the CRA. It has nothing to do with the national office. It has nothing to do with ADP particularly, other than the payroll stats. So Clyde, over to you. And I'm not going to do Mea Culpas again. I got to tell you, I've already done that.
Okay,
there we go.
That's good.
It's on there. Great. Thank you, Eric. Good recap of what we've done so far. And I'm going to work my way now through CEWS, going actually right into the Canada Emergency Wage Subsidy calculator. A little later, I'm going to share my own the screen here with the calculator on it, and we'll actually talk directly to it. The 75% wage subsidy, a lot of people are getting a little concerned because the calculations aren't coming out at 75%. And that's because there's a lot of variables in the calculation. And one of them is that the top salary is $58,700. And so you can only get $847 a week with that salary as a subsidy. And so the whole thing takes a little bit of calculation, and you have to understand some of what's going on, and you'll see that in the actual example I'm going to try and key in while we're working on it, working our way through. By federal law, it's an option to keep the staff on the payroll, but not top up the 100%. This is not recommended. Federal law, as we've been told the last couple of weeks with Beth Symes, who's been on with us before, does not override provincial employment standards. And if you were to reduce somebody's salary by 3/4, especially some of our clerical type jobs, the administrator, custodian, they may end up going down under the minimum pay, and that would not be allowed. There's a note here of someone not working but paid CPP and EI. That's as far as that note goes. For some reason, I don't know why I didn't put the rest of it in, but we'll show in the calculator what that note is referring to when we get to that point. What I'm going to work through on this is the eligibility, the calculating revenues. We're going to look at eligible employees, eligible remuneration, calculating the actual wage subsidy, and claiming the wage subsidy, and then ensuring compliance. And there's a number of things in that issue that we've got to be very careful of and prepare now for the future. There are 3 ways to apply for this subsidy: through my business account, probably the easiest way if you have the access. The next easiest way would be using business representatives. If they've got a represent a client level 2 or 3. Not everybody signed up for that because most people probably didn't recognize what the difference in levels were, but level 3 gives them the best representation for the client at any level. So that would be the preferred one, but if you don't have it, 2 will do the job. If neither of those are good options for you because you don't have access to that, you can go on to web forms, the application that's on the CRA, the Canada Revenue Agency's website, and get a web access code. If you have any contacts with the CRA where you're using a 4-digit code referred to as a web access code, that will work here as well, because that's for using web forms. And if you don't have one, my suggestion is the quickest and easiest way to get it is to call the number 1-800. Now, prove me wrong, call the number and then try online and see which one you actually get first. I've heard that the 800 number can be up to a 2.5-hour wait recently, and that is a long time to be sitting listening to some of their music. The revenue, principles of the revenue. We went through some of these last week, and I just want to reiterate them again. Revenues should be recognized only once through the layers of the church. The revenues over which the congregation has discretion. In other words, if it's a full pass-through revenue, should not count. Bequests are considered are done infrequently, but they are considered a normal part of church life. Some of us would like them to be a little more normal because it would make the treasurer's job a little easier, but we don't want them for the reasons that they come. You can elect to include or exclude government income, and that's one of the things that we'll talk about right at the end on a form that you have to include in the whole processing. And you exclude mission support grants because they are considered non-arm's length. And so we won't count for them in our own revenue at the pastoral charge level. Exclude, as I said before, pass-through revenues would be M&S and donations that are moved straight on through to another charity. As long as we're not handling them, don't have any control over them other than to write a check and send it on to the other charity, we're not counting them as revenue. And we'll exclude any non-cash investment gains or losses. We get quarterly reports, some monthly reports, and the values are going up and down, recently more down than up. And we're not going to count those unless you actually see that change in value in cash in your bank account. Some internal consideration as to who applies our internal pastoral charge structure. It really is different than most of the world outside. And so the federal government looks at all of their programs, control on where it is and who has control over the RP account. That's where the payroll is processed. Pastoral charge applies for wage subsidies, but may not have the revenue to prove that they're 15% down or 30% down. So what has been recommended is that, well, it wasn't recommended at the beginning, but the multi-point charge issue, basically on April 11th, with some of the changes made, became a little clearer to what we can look forward to. And we're looking at consolidating income statements. This particular diagram that Eric has used the last couple of weeks is the multi-point pastoral charge. Pastoral charge has the CRA's Charities Directorate and does the payroll. Everything's done at that one point. The number of points in the pastoral charge really doesn't matter to the CRA. They're just looking for who's doing the payroll, and all of those numbers should be rolled up into having a consolidated financial statement. So if that's the case, roll them up and consolidate them and then see whether you qualify for the subsidy. The one that's a little different is where each of the points in the charge has their own registration number for the charity, but the pastoral charge controls the payroll. Again, we're going to suggest that we roll these up into a consolidated statement. It's the easiest way because the pastoral charge in this case wouldn't have any income other than what they get from the shares coming in from the various points. And if you're going to prove that you've got a loss of income, the consolidated statement's going to be the only way to deal with that. The CEWS will be processed at the payroll program level, as I said, the RP account level. So you'll want to make sure you file separate application for each RP account. One of the fine examples where you'll have a second account, you might have noticed it in your RP, followed that as 4 digits. It's a 0001 for most of us. You might have a 1 and a 2. And the difference there is probably something to do with the EI and the premiums that you pay as an employer. 1.4 times the employee premium is the usual, but you can get reduced premiums on it depending on other circumstances. For cases where some employees are on ADP and some are not, I wonder why you want the extra work, but leave that up to you to make your decision. But you have to work it all separate and then consolidate for your application when you come to doing it, because you have to report your 10% in total. The next thing I'm going to do here is this website is actually taking us right into the calculator. And so at this point, I'm going to attempt to share a different screen. And it'll give me a second here. Now, there's a series of slides. I'm going to mention it now. I'll try and mention it again later. There's a series of slides that I'm going to bypass by doing this, but I'm going to be talking to them anyway. They are part of the PowerPoint deck that you will be able to have access to later. So let me go out to here, and I think that's the one I want to see.
There it is.
Hey, I like it when technology does work. Stephen, you did a good job at teaching earlier.
Working for you.
Okay, so there's the Canada Emergency Wage Subsidy. This is right on the page that I just showed you on the slide deck. And I'm just going to work my way down through it and talk to each of the slides as we go. So who's an eligible employer? Well, there's a number of things in this one. And there's an eligible employer. You have to have an active RP account, and it had to be active prior to March 15th. And you have to have experienced an eligible reduction in revenue. That reduction for the month of March is 15%, and it's 15% compared to March of 2019. Now, for some charities, they weren't operating in 2019, so they gave it an option that we could compare March 2020 to the average of January and February of 2020. That is an option, a selection that you make, and if you do move that way, you've got to maintain that for the right through the duration of the program for all 3 months that you're able to apply. The consistency in the calculations is really important with that. Then we're looking, types of eligible employers. Obviously, we're very interested in the fact that registered charities are there, and there's no argument about it. There's no extra exclusions anywhere that would take us out of that running. So we go down through, they talk here about the various eligibility periods and some of what your eligibility revenue is, but we're dealing with it from our church point of view in the prior slide that I was talking about. And at the bottom, it takes us.
It's Eric. Are you advancing your screen? Because I think some of us may just have the first few paragraphs.
Okay, so Clyde, look at the top of your screen.
Yes.
You're probably seeing an amber colored bar that says sharing has been paused. Move your mouse right up to the top there and click the button that says resume share.
Let's see if that worked. There. I'm back green on the bar.
There we are.
Now we're seeing what you're seeing. Thank you.
Okay, so let's just quickly run to the top. This is the page we were looking at, and I was talking about the eligible employers, eligible revenue reduction, and how you calculate it out. And this is all on the CRA website. It's, as Eric mentioned, it's extremely good work that's on there. So having done that, we look at our eligible employees, and for the majority of us, we're going to be looking at having employees that are still working and have worked for more than a year so with us. So there's a very few of the extra little calculations that are needed. But we'll look at the salaries and how we have to calculate those on a regular basis. But eligible remuneration is all there. Baseline remuneration is the important one in here. And again, I'll show you that when we get to the actual calculator itself. This is based on the salary, the average salary per week from January 1, 2020 to March 15 of 2020. That doesn't fit our pay periods, generally speaking. So you have to take and work out those what I believe is 11 weeks and calculate out what the weekly amount is on the average. If there was somebody who did not work for 7 or more days in there, you can exclude that 1 week from the calculation. So trying to be as reasonable as they can when they are looking at the calculation on that. So we move on from there, and we're now talking about calculating the subsidy amount, and they go through a lot of different things here about how the subsidy is calculated. It's good to have an idea of how it's calculated, but it helps if you just use the calculator, the information's plugged in, and you can keep on moving ahead. It talks about inputting different things, and I'll actually show you the spreadsheet, and then we will come back to this screen to pick it up, because you can see from here down, we're starting to look at going into the filling in some of the information. So let's go back up here to where I can get to the calculator. There we go. Download the calculation spreadsheet. And I hope this comes up for us.
And folks, while we're doing this, obviously it's a little easier to be doing this on your own time at your own desktop. But at the end of the day, if you can convert your salaries to weekly, and that might be as easy as multiplying monthly salaries by 12 and dividing by 52, the rest of this, you just have to watch out for the cap, because you can only claim up to the $847 per individual, and this one is prorated to actual salary.
I'm going to stop sharing for a minute here so I can get the try and get the Excel spreadsheet to come in.
Okay, while you're doing that, let me throw a couple of questions at Eric. Eric, does the remuneration include taxable benefits?
Yes. Yes. In simple terms, it's box 14. It's your total compensation. There's a couple of exceptions that we don't typically see in Churchland, things like some stock options or something like that. But it's basically box 14, which includes taxable elements. It includes amounts if you have it there, that's factored into box 14, and there isn't an exclusion for that. So yes is the short answer.
And Elizabeth is asking, the government slide says March 15 rather than March 1 as the start of the period. What which applies? Are we talking about income for the whole month, or income for the second half of the month, or what's the deal?
Yeah, the weekly, all the periods start in the middle of March. I think one of them is March 18th and so on. The key thing is the threshold test is for the entire month of March. So when you're measuring your revenue, you're looking at the month of March, the month of April, and so on. When you're starting to calculate these wage entitlements, all of them need to be converted to weekly and done in 4-week chunks. And this will be very evident from you when you actually dive into the spreadsheet. It is fairly comprehensible, as I said. But the revenue eligibility is full months, and then everything else after that you convert to weeks.
So if an employee went onto the payroll on January 1, then they would count for this program.
Oh, absolutely. Actually, they would count, and they would tend to count in the program even if they started later than that. But okay, so here comes Clyde with the spreadsheet, so you can get a idea of I mean, for most of you on this broadcast, we're talking 2 or 1 or 2 or 3 or 4 names that you have on that you're issuing T4s to. And again, remember that this is folks who are considered employees for whom you're taking source deductions.
Okay. Thank you for filling. Yeah, thank you for filling in on that. Now we can get into the spreadsheet. Again, this is step by step, and the instructions on it are fairly clear. Screen sharing has stopped again, they say.
So bring it in front of you and then start the screen sharing. If you switch it from one screen to the other, then it'll stop sharing. You
Yeah,
bring it down in front of you first and then start sharing.
well, I thought I had it in front of me here to,
Okay,
go with one more question.
so there's another question here. We're asking about the CPP and EI, which of course is deducted as source deductions monthly. So again, we divide by, we make that calculation, so we calculate that as a per week thing too.
Yes. Well, everything, you know, I was a little surprised actually, because we're so used to everything being monthly. But all the programs that the CRA has set up are based on either weekly or bi-weekly. That would be 26 pay periods.
Okay.
So for almost everybody, we're talking about converting monthly into week segments.
Right. And the man's amount that you would include if you're doing it would be whatever you normally include as fair market value. You can't just make it up on the spot now.
Well, you should have been reporting it every year, so it should be based on that number.
Sure.
Okay, here we go. Thanks, Clyde. Take it away.
Thank you for taking the time. Is that moving now for
Yeah,
you too?
yes, it is.
Okay, good. Back to the wage subsidy. We'll talk about the CPP and EI in a couple of minutes too, because that's affected into this calculations. But looking at the wage subsidy calculation, we're using a spreadsheet, an Excel spreadsheet. But if you've got one of the freebie programs that'll open an Excel, you can use it just as easy. The first thing we've got to do when we go in here is to select our claim period. And that is supposed to be a drop-down menu that the little box is there, and we just click on it. That easy to pick up the first period. You do have to apply for this for each of the 3 periods. So you're going to have to come back to this spreadsheet later on as well. They talk about a batch calculations here, and my preference is to stay away from the batch calculations, because to me, they just create extra stress time when I would much rather see them on a individual basis when we're dealing with it. So what we're looking at next will be the sheet tab. And so down at the bottom, you'll see instructions and results, batches weekly, as 52, bi-weekly is every 2 weeks. Bi-weekly is not semi-monthly, it's different calculation. So we go into the spreadsheet, and it is an actual spreadsheet. You type in something that says the name, and I'll just use some initials in it. This next box right here, the employee at arm's length, yes or no. If you don't fill this in, you will not get a result. So this is a very important box to be filled in. I would say that most of our employees are arm's length.
That's right. This is more for you know, small family businesses and so on, where there's a distinction. So I would say in almost every case, the arm's length relationship here needs to be to the church. So you're fine. You should be fine here.
Yeah. So we just type a yes to there. Now you can do yes, drop down box or what, but a Y will not work. You have to actually put the word in. Then you put in what you worked out as the average weekly gross pay. And on this particular line, I'm going to pick a number of 1,500. It's above the minimum, but it shows you what will happen. It does allow for the pennies on here. A lot of their calculations in past have not been using pennies, but this one allows for it, so that's fine. Now we have to put in the amount that was actually paid for each of the 4 weeks within our first period. Again, for most of us, that amount is not going to change unless you do what I had happen to me, because we didn't make the adjustment to the salary for the increase, and I had to go retroactive in one of these weeks, and that just screwed me up a whole lot because it was done in March. However, now you can see where this has filled out right out, and it automatically slots in the amount of the subsidy. Because we were over the $1,100 amount, we've got $847, which is the maximum subsidy that can be done. If we put in another person here and we put yes, and this time we only do a $236 per week, and we say that it's the same, but we can change it because she worked a couple of extra hours, or this week had a day off, or however your actuals are. You notice all the amounts across are changing accordingly. And so that's one of the things that this calculator does for you. And you've got room on here to go down. I think it's in the ballpark of about 500, at least 500 lines. If you've got that many employees, I think you're going to want to use the batch processing. But that's how easy it is to fill this out. And back here, you notice the results come into this table. This is that first sheet, the instructions and results. The total amount of remuneration for the 4-week period, and what the total CEWS amount is for the 4-week period. So that's your calculations for working out the payroll.
So Clyde, just a quick question. I know that there's going to be an offset here at some point for the 10%. Does that come a little later on?
That comes in a little bit. Yep. Okay.
And another question. Some churches may find, like mine is, that they're not eligible for March, but they are eligible for April. They didn't have the 15% decrease in March, but will have more than a 30% decrease in April. But this spans the 2 months. The week 3 there spans March and April. Yep. What do we do?
Yeah.
No, this is dealing on the March basis. We're only dealing with the first period, which is based on the month of March. But the payroll spans over the 2 months. Right. And so it's only the payroll.
Yeah. So again, the revenue test is the full month. So Steve, your folks will do this calculation, fill out this worksheet in April. The first test is you only even go to the worksheet if you've done your calculations and you qualify. Yes. So then if you qualify, then you fill out the worksheet for the applicable weeks.
That's quite correct. So what they tell you here, as you can see, is to save this and print it so that you've got the information for the next step along the way. So I'm just going to make note of a couple of these numbers so that I can put them in on the next one. 6931 and 411325. I would have preferred them to automatically fill in on the next part, but it doesn't. So that gets rid of the spreadsheet. Now I got to do a move back to one of the other screens I had. So I will stop sharing. I will come back over here and pull in the one I was missing. Where'd it go? There we are. No, I'm gonna have trouble again.
Okay.
Back down to share the screen. And I want to go back to that one.
Eric, are you trying to say something? Because you're muted.
Yeah, no, I was. Thank you, Carrie. And I was just saying to Cindy that if she has she has someone with 2 jobs, everything is based on the tax reporting. So if that person has 2 T4s for some reason, which sounds a bit odd, but that's okay, then there's 2 T4s, and you might as well do separate calculations. If they're on separate payroll numbers for some reason, you have to file by separate payroll number. Back to Clyde.
Yeah, one of the things to mention on that is if they're in the same employer, they cannot get more than the $847 subsidy in total. If they're with a separate employer, they've got 2 part-time jobs, then they can go over the 847 because it's based on the employer's payroll.
Mm.
Okay, so we're back into the form that I was talking for. Is that sliding up and down now again?
No, it's not. So again, look up at the top of the screen. You'll see that the bar has gone amber, and you need to resume sharing.
Yep. There we go.
Okay, that's better.
There we go. We're back at it. Now, as I was showing you down, we go down through and we put in the number of eligible employees, which I was just working with was 2. Total eligible remuneration, 6,931. And the CEW for these employees for this claim period, 4,113. And it does not take the pennies here. So it's nice and round. And then you see they summarize that step and they show you what your actual figures are. Then they do some premium calculations. Now this part is where the EI and CPP come into play, because if you've got an employee who is furloughed, but they are still being paid either partial payment or full pay, any CPP or EI premiums that the employer paid can be rebated. And so you need to know what that is. And that's the amounts that are put here in the next 2 boxes. EI and QPIP if you're in Quebec, and the CPP and QPP in the second box. Most of us probably aren't going to do much with that because our employees are working if they're being paid, but there could be some out there who you've said, let's keep the pay going, but there's no work to do. And that's fair. This is where you claim back that portion.
And this is something that, again, it'd be very important to document because it's very likely to be subject to payroll audits and things. So if you have that situation, make sure you're documenting the times, the wages that went into that calculation.
Right. The deductions come next, and this is where it asks for the deductions for the 10% temporary wage. And that will be 10% based on the whatever dollar value you've collected back already when you're doing this application. So just for instance, I'm going to put in $690 just so that you can see the reaction to it. Then you've got to go to your employees and say, how many of you are on work sharing benefit program? Because you could qualify for work sharing if you do it through the EI people. And this is where you put in the amount that they've actually gained from that benefit program, because that comes into the calculation as well. I don't know whether there's many doing work sharing. I personally haven't run against any, but so I'm going to leave it blank. But if there are, there's a place to put it in. And then we come to the end here and it says to calculate your total wage subsidy. And it gives us, we must have missed something somewhere because it went right back there. I didn't go back and do the claim period. That was done intentionally just so that we made sure you know what's got to have complete. And they didn't like something in here. Oh, yes, you got to put a 0 in. If you don't have something to go in, you got to tell it 0. And it took out other.
Yeah, I think you wanted decimal points there probably.
It shouldn't require decimal points, but
oh yeah, no, it shouldn't. Actually, looking at it, that's right.
there we go. That's what I want. And now what you get is a summary of the whole thing. And those numbers are very important for you for putting into your application form when you move into the doing the total application. But it calculates the result being that we're going to pull back just on those 2 employees alone for the first period only, the 4 weeks of the first period, we'll get a $3,400 payback.
So Clyde, you've been playing with the worksheet. Most everybody there are a few folks on this call who've been claiming their 10% from the get-go. Others are waiting, most people are waiting for ADP to do it for them in the next while. Should we be putting 0 in there for now, or should we be calculating what the 10% is for this pay period?
At this point in time, because the first amount is going to be available to us in the next couple of days, I would say we're better off to wait and put an actual dollar value in. But what they're going to be checking for is to make sure that what the total is over the 3 periods is what we're actually claiming under the 10%.
Yeah. Okay.
Even though we won't get it back until what could be a couple of months later, because we can only claim back as much as our income tax bucket.
And I just want to remind folks that this isn't the government setting out to make things complicated or anything. This is whipping up a whole bunch of stuff on the fly, trying to get this out to us quickly. So there is this fluid element that we are just going to need to live with. Okay.
Yeah,
I suspect too that it's easier when you actually have the form in front of you and you're sitting there and reading it carefully and answering the questions. So having seen where to find the calculator and how to find the right worksheet and so on is terrific, Clyde. But I would also want to encourage people, if you're feeling a little at sea by this demonstration, go and play with it yourself. And it looks, Clyde, like you can play with it for quite a while before you finally commit.
Oh,
So
yes.
You can experiment with it, make sure you've got it right, double check it, have your partner look it over too before you push the apply button.
Yeah, because this is not the application. This is only the calculator.
Okay.
So you can make changes, you can go back, you can wipe this out and start again if you want. I think I've been through one of these about 8 times already, just to try. I've not moved any of them on into the application at that point.
Thank you.
So there it is. And print that off and you've got your input for your application. So I got to see where I'm up to here. Yeah. Okay. We're almost up to where I wanted to be. So we can now, I'm just going to take this out. I want to share the screen again, or stop sharing, take this out and come back to my slide deck.
So just while he's doing that, for the 10% line, do we enter the amount that we actually received or expect to receive, or the total we're eligible to claim for the period? What goes into that 10% line, Eric or Clyde?
My feeling would be to put in what you expect to receive, because they're going to be looking over the 3 periods to make sure that you've deducted the full amount that you're scheduled to get.
Okay. Thank you.
Okay, that. And
make sure the bar at the top of the screen isn't amber. Make sure that it
is amber. I'm heading back there. And there's resume. So we're back to the calculator on the PowerPoint slide deck.
Yes, we are.
Okay, and I want to go up to just because of the content that's on there. Before you apply, make sure you've, actually, it should be back one before that even. Yeah. Oh no, I skipped ahead too far. Sorry. There, good. Before you apply, business details and direct deposit must be correct on your RP account. Once you apply, those details that are in your account are automatically put in your file so that payment can be made. They don't go back to your account and check to see whether you changed the address an hour later or not. Have the results handy from the calculation so that when you need them in the application form, you've got them handy. And if you're expecting more than $25 million, then you need special arrangements. You can't just use a direct deposit. So if you've got more than, sorry?
I said, I want to work for that church.
Well, no, because what we're saying is if you got more than 25 million, you better check your doctor. So it's just something that was an exception in there, and it just blew my mind to say $25 million on the subsidy. That would be a decent size operation with many employees. One of the forms that I came across only last night or today, and I haven't been able to get back to it. It's not available yet on the CRA forms list, but it's one called RC661E attestation. And this is a form that you will have to have the, as they refer to them, the owners or managers or senior employees like a controller, VP finance, CFO of an eligible employer who applies for the CEWS. They have to go through this and sign off on it to say that they knew about all of what's gone on here. This is not one to be submitted to the government unless you're into an audit. Because what's on this form, under the general part 1, the claim has been reduced by the 10% TWS. You have to know that when you file your last application. All the records and calculations must be retained for audit, and I use the capital A because it's not an audit like the United Church looks at them. It is a full-blown audit that the government will be looking at doing over the next 2 years. This information must stay with all of your financial papers so that you've got them for actually for the 6 to 7 years that we have to keep them. The records and calculations must show that your revenue reduction, how you calculate it based on what figures, and the employee remuneration. And I was surprised to see the employee remuneration until I read the next point on here, that you have to maintain the records for the amount of wages paid to the employees from the subsidy. And so that's one of the reasons I'm like to use the individual rather than the bulk batch processing on the calculation sheet. Because if you print off that page of your spreadsheet, you've got what they need for this. And then the amount of that subsidy that is attributed to each employee will be reported on their T4 form and on your T4 summary form. These are changes that I don't know how much any of the automatic systems for any of the accounting systems are prepared for. They definitely are not prepared at this time.
Yeah,
we have until the end of the year.
Yeah, no, it's Eric. And this is where so far what we've been saying about this is that it's all on us, that we have to calculate our numbers, apply to the government and so on. But what this is saying is somehow or other, they are going to expect the payroll companies, in our case ADP, to be able to get this information from us somehow.
Yep.
In order to file T4s for 2020. This is something
right.
that has not, like, they're telling us they're going to do it, but there's nobody that's got this figured out yet.
Not even close to figuring it from what I could gather. And the other thing is, if later determined eligibility requirements are not met or the amounts were overstated, all amounts have to be repaid. And if it was considered to be fraudulent, it's not only the amounts to be repaid, it's the full amount of the subsidies repaid plus 25%. So make sure you've done your calculations to the absolute best of your ability.
Yeah. And it's Eric, I'll just weigh in here. I've sat in on a couple of calls with the Department of Finance. They understand that everybody's figuring it out. What they're trying to avoid is willful abuse.
That's right.
If you're documenting your procedures for qualifying, what you define as revenue, if you've got that documented, if you've done your calculations, this part of it is just calculations anyway. It's not going to be that they're coming after people in a punitive way. There just needs to be this giant reconciliation, hopefully in the fourth quarter of this year, when we come out of this pandemic and we're feeling renewed and fresh again. But right now, everybody's just trying to figure it out and keep moving.
I agree with you. It does not sound like they're going to be punitive in any way. And they know most of the small businesses, it's people that don't understand a lot of payroll calculations, though. Anyway, the second part of the RC 661 form is where all the various elections that apply. There are 7 different elections. Yes.
Before you get into that, Clyde, then let me pull up a couple of questions on the chat about what you've just said.
Okay.
And I think the first one there from Gord Waldy, Eric just answered. The ADP does our T4s, so do they get the information about this from the CRA or from us? And what I heard you say, Eric, is we don't know yet, but we should know by next February.
We should know by next October or November, I would hope. But yeah, somebody's got to have to do it. And it would make a ton of sense, frankly, to have the CRA do it, because they would have the information. But it's just speculation. I wouldn't want to waste a lot of time on that today.
The only problem with the CRA doing it is that they don't have the individual breakdown.
Yeah.
Because you're not reporting that anywhere.
No, there you go. There you go. So we will figure that out for sure. I also see one here from Watt Bulb. I think someone I've written to. Yeah, you will have to apply for the 10% or do the work for the 10%, because the 75% wage subsidy assumes that you have done that.
So
that's right.
Really only an additional 65 on top of the program they thought you already applied for.
Yeah.
Basically. Yeah.
Basically.
Okay.
Yeah. Yeah. So a very knowledgeable person is going. John Barr is talking about what we might show. I'm not going to speculate on the fly here. Some of this, the main thing right now would be determine your revenue loss to the best of your ability in a faithful, consistent way. Declare your assumptions, write down every assumption that you made. And then, frankly, I don't think anyone's going to ever come after you for the 25% if you faithfully try to do it in an ambiguous environment.
Yeah. Okay. Next, we look at the elections that there are to make on these, and there are 7 different elections. And rather than type them all out on here, I tried to look at it and say, okay, they're telling us that we got to do things according to paragraph 125.7 bracket 4XA.
Okay, Clyde, I'm already tuning out.
Yeah, exactly. And that's all the way through here, and none of us know what those things are, and I could not find them online even. Okay. However, what these 1, 2, and 4 to me may apply to multi-point charges, because it's talking about related groups combining into one. So it's something to look at. The number 3 will not apply to any of us. 5 is if you choose to use the cash method, because that's your normal way of doing your accounting, then you will have to check box 5. Prior reference period, I'm still trying to decipher what they're referring to with that, but I suspect that has to do with the whether we're using March over March versus the average of January, February over March. And so we have to look at that a little more. I think it's the if you use the January, February, because that's an optional choice.
Right. But I mean, at the end of the day, we're certifying here. Basically, this is going to be millions of dollars and certainly thousands of dollars for everybody on this call. It's perfectly logical for the government to want us to do some certify that what we've done and why. So this is paperwork, but again, faithfully, consistently doing your calculations, and we should be okay.
Yeah, and if you check a box, make note of why you checked that one. What was your thinking on it? Because it just needs to keep that going. There's the attestation statement at the bottom where you take line H from your application when you do the calculation. So that indicates to me that this form gets filled out after the application has been filed and accepted. And they're accepted as fast as you file them. That's as easy as it comes. And it needs to be signed and title put on it. And then this is kept with your paperwork. It is not sent to the government. It's available for audit.
So if I may, folks, this is like those of you who went out and got one of those bank loans, the CEBA loans for the 40,000. No one looked at it. They sent you the money, and then they said, "Oh, by the way, you're going to have to sign this form."
Yeah.
And a few of you read the small print. So this is the small print that you're going to ask to sign. There's nothing controversial in here. And I'm looking at a question from Gord Waldy on YouTube. Any whispering that the CEWS program will be extended beyond June? That question was asked of the finance people yesterday, and the answer was, we are finance people. We do whatever the politicians say. So it would be speculation, but it depends how some of this return to normalcy stuff plays out. I would put it at least a reasonable chance that it could be extended, but that's pure conjecture on my part.
And who would be the person to certify the attestation? Is that the treasurer or the chair of the board or clerk of session, or who does that?
My own feeling, when they tell at the top, they mention owners, managers, or senior employees. Probably the finance chair, if you've got a finance committee. You could have your board chair, council chair, whoever at that level, but somebody who has to understand the process. And I expect we'll find a lot of them are going to be signed by the treasurer who actually files the application. And I think that's reasonable.
Thank you. No other urgent questions coming up, so let's carry on.
Okay, applying for the CEWS, you sign into My Business account, you sign in using Represent a Client, or you can sign in on the web forms, and we talked about the web access code a few minutes ago back towards the beginning. And after you apply, and I couldn't get into an actual application because I don't have enough calculations made on any of the ones that I've been working on. I've got to get that done and we'll start. There's no rush on this anyway, because if you've got it done by Monday, I'm told that it will get into the first batch of checks that they will start producing on May the 6th, which I believe is next Wednesday. So if you want to wait a little longer and make sure you got your proper numbers in from ADP for that 10% figure, I don't see it being a problem. They're going to be pumping checks out or pumping it into your bank accounts as quick as they can once you start getting it. After you've applied, though, deposits are expected to start May 6th. Checks could take significantly longer. My own experience with checks over direct deposit is anywhere up to 6 weeks difference, which doesn't help cash flow. Include all the subsidies on your return. What that would be is that on our T3010 form, you have to add these subsidies to line 4540 on Schedule 6, which is where you've got some money from the government. A T4 will have an other information box to report the amount of the subsidy attributed to that particular employee. And again, we must keep records for audit purposes. And they mention again about the fraudulent claims, but I don't expect to see a lot of that among the churches. They know who they're dealing with. And complete record of all assumptions. That to me is probably the most important part of what we're doing in this exercise, is to remind you that when you make an assumption, record it.
Yeah, and there's been a fair bit of question between calls. On your income statement, this will be a government grant or other income, however you record it.
Yeah.
It will not count in future, like you don't count any money you got this month as income for your calculations next month. It won't count for assessment, but it will be, found money actually.
Yep.
Okay.
I must have backed up the wrong way here, because this is RCI, or did I duplicate it maybe? Oh, well, we've done that. Now we're into the governance side of things. Wage subsidy applications do not require regional approval. Region approval is required for loans, but not for the subsidy. If you're going for a loan, the Congregational board can approve the loan and give the blessing to a single person as authorized to bind the applicant. Yes, you use dual signatures for everything else, but you can't do a dual signature when you're applying for a loan online, for instance. And regional approval tends to be quick, depending on your region, and depends on how quick they get going through their process. At the moment, we don't have a loan with the CRA that we can access. Emergency response benefit. This is the individual one for laid off staff. If they're laid off, get them to apply for it. They've been very good at saying, no, you don't qualify here. You got to go over to EI or vice versa, but they've got to apply. It provides a flat benefit of $2,000 for people who have been out of work for 14 consecutive days. And it will cover for the 4-week period at that time. And they did reduce the earned income in 2019 from 5,000 down to 1,000. So it includes a lot of extra people in there.
Oh, Clyde, I'll just clarify. The 5,000, I think, still might apply, but they've allowed people to earn $1,000 a month before a clawback. This is my slide. I apologize for that.
Okay, the 5,000 was reduced to 2, I believe.
Okay.
But they're still allowed to earn 1,000.
Yeah. However, for folks, if there's lots of sort of what we call contract folks who might be T4A'd locally or whatever. They might actually be better off being on a CERB than what you're paying them. So that's something to, when you start getting into the difficulty of actually stopping paying someone, you might have a custodian or a music person or something who could still be making some money somewhere else, but is eligible for the CERB. So maybe we'll move to the next slide. Again, we're really thinking that if you're eligible for the CEWS or CEWS, that there's a real argument for doing what the government is trying to encourage, which is, keeping going here. But again, we'll have to do what we have to do, and in particular, if this thing keeps going beyond June 6th, without the program being extended, we'll probably be spending more time talking about how to do layoffs in the most respectful manner. Let's hope it doesn't come to that. Let's hope that the curve has been beaten down, and we're talking more about phased reentry to some form of normalcy again. Next slide. So the record of employment, Clyde, you might want to comment. Clyde's done a recording at United in Learning on how to do that through Service Canada. The snail mail process, they have burned through the forms, as I mentioned last week. All the payroll providers have some, but not enough. So I'm certainly encouraging people to try to go to Service Canada, and we do have a webinar online, which was just recorded yesterday, I guess.
Yes, it was.
Went live about 2 o'clock in the afternoon yesterday.
There you go. So we're almost done here, folks, and my wife did bring me my beer. The next slide, please.
Okay, just before we go into that, if you've got the access code, it helps getting into Service Canada as well. If you've got access to My Business account, you can use that same access to get into Service Canada. You don't have to apply again. There's lots of tie-overs between the two.
Okay, and I'll just say a few words about the United Church. We've already had our first few applications. The application form is online at the national site, and I believe at some or all region sites. If not, it will be real soon. And basically, we've already had a couple of applications come in for a $10,000 interest-free loan to help cover your costs, your operational costs. We've got the details here, but the basic concept is it was modeled after a little bit after the federal program that fell through. The idea that there'll be a forgivable element if it's paid off in time. The whole idea here is to buy us some breathing room. Assuming your person who's filling in the application form is authorized by your board, we've set it up so it goes to the form you're filling in online automatically goes to your region for whatever handling, whatever limited handling there will be at the region level. Next slide. Want to stress that this is intended to supplement federal funding programs, but if you don't qualify for the 75%, you may be needing to access that right now, and it's there for you. We have your bank information, so what you might be struggling to get that to the government, but generally speaking, we're set up to get a check of $10,000 into your bank account in very short order, within a few days, and we're doing all this stuff remotely. None of us at the national office. We're all working from our homes and basements and attics and so on. So just want to again highlight the fact that an emergency grant from the United Church Foundation and money that we're planning to borrow is making this kind of activity possible. And we'll also be looking at $10,000 may not be enough for larger congregations. It might make all the difference for smaller ones. So we will be looking at the criteria as we go along and try to respond to and fit in with what the government is doing. We're in the home stretch. So I just want to stress here, and you would have seen it tonight. Clyde took you through a spreadsheet that was put on the internet for the first time last Thursday and is already on version number 4 because the government is updating it in real time, understanding where people are misunderstanding stuff or fixing errors, but generally trying to frankly, I'm going to say this, dumb it down to make it as usable as possible. So there's a whole bunch of stuff happening at once. I think it's inevitable that there'll be some duplication with ADP, some of you claiming your 10% yourselves and ADP doing it for you as well. I think it'll be inevitable that there'll be some overlap calculation errors and things that happen. The way I'm looking at it is the government is trusting us to figure this out in the fall while they're trying to figure it out too. That may be looking at the world through rose-colored glasses, but the church, I think can be expected to lead by example here. So you'll be testing to see, the most you could get under the 10% subsidy was going to be $1,375 per employee. You'll be able to measure that. It either hit your bank account or it didn't. And you've got all year to claim that amount. But in the meantime, we take it into account with the 75% calculation. As long as you're keeping good records of your assumptions and your calculator, and when you played with that calculator online, it's just like your own taxes, where you might do some scenarios and then finally you print the final version. Same thing here. You're going to print. You're going to print the calculations. Those numbers are what go into the online application, and hopefully it's enough to make a difference. Next slide. So again, here's some contacts for the church emergency loan. I've added the website link. The application is there. And I'm looking at some questions here on the, so Lori is reporting, for example, that she got her code in the mail in about 6 days after first applying. And then she had to do it in 3 business days another time. So, I've heard horror stories too, but the bottom line is I wouldn't necessarily rush to finish the work this week to hit the first wave of payment, unless, that's the difference between, someone putting locks on the door or something. So I would catch your breath a little bit, and if anything, over the next couple of days, see about getting those access codes, like seeing if you have a My Business account, whose name is on it, and in particular, talk to the Charities Directorate, because they know that most of us haven't done this stuff.
Just a quick comment on that, Eric. I've known 3 or 4 people that have already gone through the Charities Directorate since they reopened to their helplines, and they've had absolute great service from the Charity Directorate staff. They were really pleased. They even walked them right through the process and got them signed into my account. So yeah, that is helpful.
Yeah, they're all over the place. The staff are breaking the normal rules to try to help. And, obviously they're being swamped too, but I would just flag that. Peter Mitchell was asking about the loan, whether it's revenue. It isn't revenue anyway. It's actually going to be, the cash is an asset and the obligation to repay is a liability. So you'll be okay.
Okay, before we go on to the last slide, you want some more questions there, Stephen, or are we up to date?
Anything on YouTube? I just want to say to everybody, I appreciate, we're trying to show you the stuff in real time, and hopefully that's helpful, but sometimes it can be frustrating too. The best thing you can do is just play with the online calculator. You can change it as often as you want, and frankly, you're just going to print the final version you want to use. So get yourself comfortable, and if you have ongoing questions about how to get certain amounts or anything, send them along to us and we'll try to respond as quickly as we can.
And the slide deck will be available tomorrow, and it has basically my comments for when we were actually looking at the calculator and the spreadsheet. Are all there in the different slides, so have that available when you're working on it and enjoy the play.
So I'm not seeing a lot of extra questions coming up, which is great. It will take another 30 seconds to just fill some time while people think of their last questions. But
Sure. And
Um,
Clyde, I'm seeing a question
An
here.
hour and a half, and we may be ready to draw to a close, and that'd be just fine.
Yep.
Yeah.
No, Clyde, I'm seeing a question about how long it takes for a REPA client authorization to get in place. Julia says she submitted it online last week. Don't those
My
things be pretty quick?
my suggestion is that it does come through fairly quick if everything is neat and clean. But last week was what, the second week after the charities director had opened up, and I know there's some connection back and forth between, and it wouldn't hurt to follow it up. If you call the charities directorate and see if they can follow it for you, they're all connected together and they all work on it together. So
Okay.
I can,
It's about time to move us to the, we're all in this boat and we're still afloat. But so thanks everybody for hanging in with us. We hope it's helpful. This is probably the single largest benefit that's available to us. So you know, I would just encourage you to play with the calculator enough to feel comfortable. Remember that you're converting it to weekly, and don't be afraid to make an assumption. You know, like if they're having, you know, if your payroll is steady state, then your January to March 15th payroll is just 2.5 months. There's not a lot to discuss, and you just convert that to weeks.
right.
I think it's time to draw this to a close. So thank you to Eric and Clyde for the work you're putting into this and for staying on top of this week after week after week. You're saving us an enormous amount of work because of all the research you're doing. We can just tune in and get the benefit of that, and we are so grateful. So thank you.
And thank you to the Prairie Provinces for this remarkable fashion statement.
Yeah.
And I'll just note for others that during COVID-19, I've grown to a double XL, if that's relevant to anyone.
And Eric is not handing out free sunglasses for anybody who needs to look at it.
Yeah.
It's very disappointing. So we will look forward to seeing you again next Wednesday at the same time. Come and join us and get the next update in the serial. If you'd like to join us tomorrow afternoon, we've got a webinar that's primarily for clergy and church leaders about congregational programming. Tomorrow we're looking at funerals and how to respond to a funeral call in this time of pandemic, and how do we take seriously the needs of the families and the restrictions that we have on our movement and the people we can be with. So that's tomorrow afternoon at 3:30 Eastern time, and it will also be recorded at United in Learning. I'm going to take Eric and Clyde into a private breakout room where they can debrief with each other for a couple of minutes, and Eric can share his beer with the rest of us. But for the rest of you, I'll say goodbye and look forward to seeing you again another time. Bye for now.
Bye.